The market is balancing on a razor's edge and could easily tip to either a seller's or a buyer's market. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, January 30th. We know that buying or selling a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. We like to start off the video by looking how the market performed this past week. There are 23 homes currently on the market, which is the same as last week, and the average asking price of those homes is $1,972,000, up just slightly from last week's average asking price of $1,915,000. 2 homes went pending, one more than last week, and the average asking price of those pending sales jumped up significantly to $1,612,000 compared to the one home that was asking $1.3, or just over that last week. And 14 homes closed this week, 2 more than the 12 we had closed last week, and those closing prices are relatively flat at $1,817,000 compared to $1,880,000 last week. So now we know how the market performed this past week, and next we can look at the broader trends that help us determine where the market might be heading. But before we do that, if you do find this information helpful, why don't you hit that subscribe button down there and ring the notification bell while you're at it. That way you'll always be informed about how the market is shaping up. And while you're down there, why not share it with a friend also? Everyone deserves to be in the know about their local real estate market and how it's impacting them. Okay, let's look at those broader indicators. Inventory stayed the same this week at just about 23 homes, just over 20. That is well below normal inventory levels, but very much in line with what is normal for this time of year. Inventory levels remaining flat doesn't mean the market is picking up necessarily. It has more to do with the fact that few sellers are bringing their houses onto the market. That could change in the near future. We already have 14 homes marked as coming soon, so we could see an increase in inventory like we saw last year if we don't see pending sales start to pick up. And speaking of pending sales, our turnover rate, the low inventory isn't always due to high market activity, and our turnover rate speaks to that fact very clearly. It's well below 50%. Here's 50%, and here we are sitting just over 30. Yeah, just about 30 this week. The good news is it is up from about the 22% turnover rate we saw last week. The average price on pending sales for this month is about $1.5 million, and it appears as though there is a decent movement in the lower price ranges of homes, but homes up in the $2 million range are lacking a deep pool of buyers, and so they are not moving quickly or turning over quickly. The over-under metric is a number that is very susceptible to major swings when the number of sold listings is so low. One home closing significantly over or under the asking price can quickly skew this number. That being said, that temporary spike where we saw it go over the break-even point is gone, and we are back to the average closing price being below the average asking price. It is still well within a standard deviation that tells me neither the seller or the buyer has a clear advantage in this current market, but that could change. Like I mentioned in the turnover segment, the higher priced homes are not moving. Because of that, the average sales price is moving back down. It's stayed relatively flat for the past month or so, but it is crept back down below 1.9 significantly after it had jumped over 1.9 last week. It sits at right around 1.8 this week, and with the past 2 weeks of pending sales averaging well below 1.7, I expect that this average sales price to continue to decline for the next few weeks at least. The triple Q had a short spike in the middle of the week before settling back down to the nearly flat line that we've been basically seeing for the past month and closing at almost equal to the closing we saw at the end of last week. With the continued uncertainty around the economy and inflation numbers being stubborn, this fund isn't going to be enough of a positive push for our buyer demographic to make any drastic changes in their market behavior. The good news is that with it holding steady, if not slightly improving, it's also not creating any more negative headwind for our housing market to fight against, because it has plenty of that already. And along that same concept, our interest rates are doing basically the same thing. They did increase by 1 basis point this week, and the Federal Reserve voted to not make any more cuts this week to the discount rate. Like I said in the previous section, there is just too much uncertainty in the economy for any major changes to occur. The market has continued its sluggish start to the year, but that's not abnormal for this time of year anyway. The thing that I will be paying closest attention to over the next few weeks is the inventory and turnover rates. We are currently at a low enough inventory level that the buyers don't have a strong advantage over most sellers at the moment. That's shown by the strong closing asking price. But that has the potential to change really quickly if inventory starts to climb without significant increases in the pending sales. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button down below and ring the notification bell so you can stay informed on how the market starts to shape up this year. And if you need any help navigating the stressful and confusing process of buying or selling a home, reach out to us directly or leave a comment down below. We are here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.